Hi guys, this is Andrew Dillon. This video basically shows what I learned throughout the year in college, what I learned in a module called Finance. Now, there isn't really a particular software or computer program where I can use finance tools and features. So, what I'm going to do instead is I'm going to show you what I learned throughout the year on the Word document and see how you all can understand, see how difficult finance really is when it comes to working with finance in a full-time job and a part-time job, and especially with anybody that's going to school level to do a master's or bachelor's degree in finance. But what I'm doing is not a major finance module. It's only a level 6 finance module. So the first document is called Finance Trading Profit for and finding missing opening costs. So I have to find missing opening costs in my exercise that were missing from the trading profit table. So I have to find the answers myself. So now I'm going to read through the document now. So this is the answer for how to find the net purchases, which is in there. Net purchases, the same with the cost of sales. So I use 857 plus 50,000, I get 907, and that's the answer for here. And then I minus 75,000, and I got answer for cost of sales, which is 832,000. And then this is where it comes to the open and missing stock. As you see here, that's the trading profit. Always starts off with credit sales or just sales. And then it's trade creditors, then there's net credit sales, then there's less cost of sales, and then there's opening stock plus purchases, then there's net purchases and closing stock, there's cost of sales, and now gross profit. And here's the hard bits, the less expenses of interest paid, the operating and net profit, debtors. Whatever percentage you've been given, it's 5, 10, 15% of debentures. Then it's the profit and loss balance of the end of the year, and then issued ordinary issues, and then fixed assets, which is 360,000. So that's the trading profit. Very good. Now I'm going to move on to the next to show you what gross margins and net margins are when you are working in finance. This is the layout of both the margins. So you start off gross profit, multiply percentage, then you put an underline wherever it is, then you multiply by percentage and you get a percentage answer. So gross profit is over the net sales and net profit over the sales. And that's an example right here. Just a number example. How to find and analyze the figures. And here is the explanation of the figures and the analyze of why. So the explanation: for every euro made in sales, only 12 cents or 12% is generating. It also means that every €1 is in sales is 66 cents is cost of sales. And why? It's because purchase figure of 120,000 seems quite high in relation to the sales figures of 952,000. It reduces costs by looking for cheaper suppliers, and always be careful of the quality of the products. Very careful. And then discounts for bulk purchases with current suppliers. And then there's a note here which it says it is often better to negotiate with current reliable suppliers. Then sales, it might rise your selling price, but this may be risky as customers might look for cheaper alternatives. Then there's three more strong points which it says might offer existing customers discounts on bulk sales and offers. Strong broadband and finding new customers, and it can be expensive in terms of marketing. And that margin analyzes whatever we do. Yeah, whatever. Then move on. How could we reduce the bill? Reduce overtime bill if there is one, reduce the hours, outsource the production and make redundancies. Again, this is the same figures from the next question, same trading profit once again, just the figures are completely different. Yeah, that's it. It's all, as I said, all from the rest of the explanations. That's all from the next question. So that's basically the end of this document. Now move on to the next one, which is overhead absorption rate and apportionment. So direct labour hour has budgeted overheads and budgeted labour hours. €100 plus €50 in just 2 hours. Then 100 to heat, 2 hours to make tables. Then have machine hour, budgeted overheads and budgeted units. Under or over absorption. Over absorption are calculated using budgeted features, as the actual features are not available. Businesses cannot wait until the actual features are ready, as they will not be able to calculate the selling price of the products as well as the actual cost involved in production. When the actual features are prepared, then they are compared to the budgeted features. Under absorption occurs when actual overheads are greater than the budgeted features. Over absorption is, sorry about that, I'll just edit this. Right, now here we go. Now, so over absorption occurs when actual overheads are less than the budgeted features. Then direct material labour, €1,000 equals €2, or brackets the €60 to 500. Less board 60% wages. Assembly guy is polishing. Direct material is €60. Direct labour is 20. Overheads €4. Then we add all together. The total answer is €84. I'm only learning this, but I'm not an expert, but I'm truly getting to what this is all about. So, time is over abortion rates. Yeah, overhead abortion rates. So €2 hours multiply €2 equals €4. Absorption cost and apportionment. €1,000 is depreciation on machinery in a year. €80 machinery, €50 assembly, plus €70 of finishing is equals to €200 of service department. Then I have another some example here. Assembly is €200, machinery is €50, and finishing is €50. And add that up, the service department is the total of €300. And then here are the common ways of apportionment. The first one is rent, the second one is production supervisor salary, the third one is depreciation of machinery, the fourth one is canteen costs, the fifth one is insurance costs, the sixth one is number of staff or labour hours, the seventh one is machine value, the eighth one is production cost centres, example is assembly area, the ninth one is service cost centres, example of this is a personal department, or the canteen costs may be sorted differently or in a different cost centre. And here is an example. It says a furniture manufacturing company, when absorbing production overhead costs into a product, a number of steps need to be carried out, which are 4 steps. First one is accolade and abortion production overheads to the production and service centre. The second step is reapportion service centre costs to production centres. The third step is calculate overhead absorption rates for each production centre. The fourth step is use overhead absorption rates to cost products their actual costs occurred. How these overhead or abortion depends on the type of the overhead costs. For example, rent could be abortions based on the floor space taken. And here are the calculations to the apportionment. If the rent is €6 per month and the total floor space of the factory is 2,000 square meters, then the apportion rate for rent is €6,000 to €2,000. Then the answer will be €3 per square meter. Then I have to multiply the number of units for the cost center by the apportionment rate. Then if the floor area of the assembly cost is 750 square meters, then the cost apportioned, then the rent is 42,000, and my answer is going to be €259. Maths. Then I have a table which shows the full explanations of apportionments. The current debt is the rent, depreciation of machinery and costs, supervisor salary, insurance of MK, content cost and total. I have to analyse and find the total of the results and answers of to find the actual overhead apportionment rates. So the first one is current debt. Second is assembly. Third one is finishing, and then the last one is the total. There's a lot of sums to be taken. That is my calculations and my workings to find answers for the table. So yeah, very good. So I'm going to stop right here, and then I'll finish off the next video with the next two documents that I learned in finance so far. So thank you all for watching, and have a nice day. See you all very soon. Adios.